Poor people retire while the rich achieve financial freedom. Have you ever wondered why? The short answer is through passive income, and investing in stocks is one, if not the best way to do so. Welcome to 5-Star Finance. To earn passive income with stocks, first we need to talk about dividends. What is a dividend? A dividend is a profit earned by shareholders after the company decides to distribute its earnings instead of reinvesting them. It can also be taken as a per-share payment that an investor receives from the stock they've invested in. It can kind of be viewed as the companies recognizing the shareholders that they are part of their business. To put it simply, investors are given a slice of the pizza, and it's up to the company to decide whether to pay a dividend or retain the earnings. At the end of the day, it's no secret that shareholders love dividends, because it's just the company handing out some money to their investors for doing absolutely nothing. Retained earnings, on the other hand, is a way for companies to reinvest that money into the business, and it leads to strengthening the equity and therefore the shares owned by the investors. Alternatively, it provides the investors with an option to sell their shares at a higher price than what they paid for, making money from stock exchange, selling shares, and dividends. If you're looking to make some serious money, then the stock exchange should be your go-to place. Let's get one thing clear: you're not buying the stock, you're buying the company. Normally, a company, corporation, or business is divided into parts which represent some ownership of it. These parts are called shares, also known as stocks. A stock market is an index of buyers and sellers which represent a certain claim or ownership of companies, investments, shares, and securities. In simpler terms, a stock market is a place where sellers list their companies, shares, or investments, and the buyer has the opportunity to buy these stocks and become the owner of a fraction of it. That means you can have a part of the company by simply investing in the shares, also gaining the voting rights. Which stocks pay dividends? A lot of companies in pretty much any market, such as banks, mining, telecommunication, and many more, can all pay really healthy dividends. So, just by hand-picking these companies, you can start off in your journey to financial independence. However, one thing you need to avoid is to invest in stocks. Simply forget about them and expect the companies will send you dividends. Tracking your progress is important to making huge dividends. One thing which makes the business the riskiest is that not every dividend is going to be sunny and bright. Companies have ups and lows, and not every day is going to be a sunny day. To illustrate that, you might want to research thoroughly before you go investing into a company. So the question remains, how do we know which companies to invest in and which stocks pay dividends? Dividends play an important role for investors seeking income. To start with investing with the objective of making income, firstly, you need to pick a portfolio of companies that pay big dividends. This can help you maintain a source of passive income which can grow over time. But you cannot just go on a vacation on an island and hope that companies will pay you a consistent stream of dividends. You are likely to fall into the dividend trap. What is a dividend trap? Some management may want to keep their share price stable. Sometimes investors become overly dependent on their dividends. Indeed, investors usually make a lot of money, but occasionally some of them fall prey to this deadly trap. When a company is no longer developing or flourishing and is in a slump, some management may decide to continue to pay dividends to simply hook the investors, even though it may not reflect the earnings. You may obtain big dividends, but in the long run, the value of your shares will fall. Companies often use this strategy to maintain a constant source of the share price. How to avoid dividend traps? So, how do you make sure that a company you're investing in isn't plotting a dividend trap? Avoiding a dividend trap can be tricky at times. First, you need to know that the company you're investing in has low or no debt. This means that the money they make is solely theirs and they don't have to pay anyone. And the other thing, you need to make sure that the company has consistent and positive cash flow. For this, you need to analyze the data for at least 10 to 15 years and check the yearly earnings and growth. How to invest in the dividends-paying ETFs? Another way investors like to make their money is by buying the dividend ETFs. One thing about ETFs is that they are purely passive and are solely based on some particular index, and all of them have some investment objective. You always know what these companies are up to. Interestingly, you won't get a big booming share price over time with these ETFs because that's not what they're designed to do. At the end of the day, they are able to provide you with big dividends. Well, these were some ways we should know if we want to know what stocks pay dividends and what stocks not to invest in. But now we need to know how to make $1,000 per month as fast as possible. How to achieve $1,000 per month? Making $1,000 per month is a common investor's goal. What we've gone through so far in these ETFs and listed investment companies can help us get dividends amounting to 5 to 6% annually. Reverting to math, we know that making $1,000 per month means we're making $12,000 annually. If we were to have a dividend income worth $12,000 annually, we would need to invest $200 to $300K into the market. So the first way is to have $200 to $300K invested into the market, but this is not achievable for most people right now, especially if you're a student or just graduated finding your way out of those student loans. The go-to option should be to target this investment in the coming years. Let's say that in the next 10 to 20 years, you can save $200 to $300K and start investing. You will see that you will achieve the goal of $1,000 per month by starting slowly. We need to see what we need to invest each month for the next 10, 20, or even 30 years, so that when our working career has concluded and we're nearing our financial freedom, we will have reached that $1,000 mark in dividend earnings. That's more of a safe way to go about it. Investing periodically in the next 10, 20, or even 30 years and compound your investments to $200 to $300K per year. If you want to build a portfolio that can earn you a passive income, first you need to know that there are a total of 6 stock categories and either one of them can pay dividends. Make sure you check our free ebook in the description below and learn how dividends are influenced by each of these 6 stock categories. In the long run though, it may be difficult for beginners to sustain investment and gain big dividends. For that purpose, we must know about the compounding effect. What is the compounding effect? Gradual growth is very important, and that's what brings us to the compounding effect. Let's just say that we've put $5,000 into the market, and we're going to come back every year and add to it. For example, if you want to achieve $1,000 dividend per month for 10 years, you will have to add $1,210 if you're achieving 6% in annual returns, or $2,041 if you're achieving 4% in annual returns. However, if you stretch that and make it a 20-year goal, then you'll have to save $417 per month at 6% annual return and $820 per month at a 4% annual return. But then, if you're making it your financial freedom goal, this means you're playing long, then it gets simpler. Assume you're aiming for 30 years, then at 6% returns per year, you will only have to save $183 per month, and at 4% per year, you'll have to save $425 per month. The main reason this process keeps getting simpler and easier is that we're just stretching it out over a longer time period. The longer we're working on it, the more the compound effect. For example, if we're working for that $200K investment to earn a dividend of $1,000 per month over 30 years, we've invested only 34% of that money. The rest is due to the compounding effect. That said, the goal has become much easier. More than $1,000 in a month might sound like a pretty good deal. Investing and stacking cash through the compounding effect can go hand in hand for you. Earning through dividends is not everyone's piece of cake, but once you've got the terminology sorted out and learn how to analyze dividends from the 6 different stock categories, you're well and truly on course. All you have to do is invest, go to sleep, and come back to collect your money. What are your thoughts on this? Let us know in the comments section below. Check out this video we've handpicked for you, and we'll see you in the next one.